Hello, and welcome to today's A-Team Group webinar on fighting fraud and financial crime with RegTech. My name is Sarah Underwood. I'm an editor at A-Team Group, and I'll moderate today's webinar. Our expert speakers today are Lester Joseph, Manager, Global Financial Crimes Intelligence Group at Wells Fargo and Company, Jordan Danash, General Manager of Relativity Trace at Relativity, and Julia Mura, Head of AML at World First. I'll ask them to introduce themselves shortly, but just so that you can get the best out of this webinar, some information for you. To the left of the video screen, that's not right, to the right of the video screen, you'll see a panel. It has two kind of channels in it. One is for poll questions, and I'll let you know when those are coming up. Please do vote so we can gain some opinion from you about the topics we're going to talk about today. The other area is a Q&A area, and that's where you can put your questions to our speakers. Please ask your questions at any time, because we won't be waiting until the end of the webinar. We'll try and sort of fit in as many as we can as we go along, just so that we make sure that we answer them. So speakers for the questions in the Q&A channel, poll questions in the other one to the right of your video. Sorry about that. Anyway, that's enough of me, and let's come back to our speakers. Lester, please introduce yourself and tell us a little about your interest in resolving financial crime.
Thank you. Hello, everyone. It's great to be here with you today. As Sarah indicated, I'm the manager of the Global Financial Crimes Intelligence Group at Wells Fargo. My team studies typologies in financial crime around the world, geopolitical situation, and of course, we also have access to lots of transactional information at Wells Fargo, both domestically and internationally through our correspondent banking network. So we use all that information and try to keep on top of financial crime trends and provide information to our lines of business and people in compliance to keep them up to date on developments, and also work with all of our team members to try and find ways to mitigate financial crime. Prior to coming to Wells Fargo in 2010, I spent 25 years as a prosecutor with the U.S. Department of Justice in Washington, D.C.
Thank you very much indeed. Jordan, coming to you.
Hi, everyone. Thanks for joining us today. I am Jordan. I lead Relativity Trace, which is Relativity's communication surveillance business. We're a cloud-based comp surveillance platform that leverages machine learning to detect financial crime, market abuse, and other forms of misconduct.
Excellent, thank you. And Julia, coming to you, please.
Hi, everyone. I'm the head of AML at World First, which is the fintech payments provider. I joined World First several months ago, and before this role, I spent several years at Standard Chartered in London, where my last role was head of correspondent banking, FCC for Europe and the UK.
Lovely. Thank you all very much indeed. And before we kick off our conversation, let's take a quick poll. You'll see that to the right of your screens. And the question is, where on your organization's business agenda is fighting fraud and financial crime? I think that one's pretty easy to answer, but while you do that, let me come to you, Lester, to set the scene and talk about the extent of financial crime and why it continues to rise despite firms and governments' best efforts to reduce it.
Certainly, the extent of financial crime is almost an epidemic these days. Just as we deal with the COVID epidemic, it's really amazing the types and varieties of financial crimes that we're facing. Interestingly, people still use the old kind of traditional financial crimes, such as counterfeit checks, which is odd since very few people seem to use checks anymore, but it's still a common type of fraud, and going all the way through the internet fraud, through business email compromise, through, of course, and now we're dealing with ransomware, which is not really fraud, but still a similar type of problem. And then, of course, the things like the COVID provided opportunities for the criminal organizations to exploit in the US, I think in the UK as well. We have several benefits programs that the fraudsters were quick to jump on to exploit. They reacted much more quickly than the government or the financial institutions could. So we're really being hit on every side with different kinds of fraudulent activity right now. And it also, one other development is it seems to, in some cases, be very well organized. It's not just one-off, it's organized gangs and networks that are perpetrating this activity.
Okay, thank you. Jordan, how do you see the extent of fraud and financial crime?
Yeah, I mean, the financial system is huge, and the monetary opportunity for some of this wrongdoing is significant if you can get away with it. And sometimes financial crime happens, often it happens with evil intent. Sometimes there's a lack of education, individuals pushing the boundary of what they think is a gray area, trying to make a quick buck. I don't think a perfect system with no wrongdoing at all is necessarily the goal here. I don't think that's realistic. I think what we're trying to do is to create a deterrent, to make an example of those committing crime, so that there's real penalties associated with attempting this type of misconduct. I think financial crime still exists because it's hard to detect. There is a massive amount of transactions, trading activity, communication data that exists in the financial system, and we're looking for a needle in a haystack. And I think we're just getting to the point where artificial intelligence and machine learning, cloud scale technology is getting to the point of being able to keep pace with this massive amount of data. And I'm hopeful that this type of technological innovation will enable governments and firms to have more deterring power than they've ever had before. But I agree with Lester. It continues to be a big problem.
Okay, thank you. We'll come back to technology and how best you can secure yourselves sometime later. But could we see the results of the poll, please? There you go. Jordan, what do you think of that?
I mean, I think it makes a lot of sense given the widespread nature of this type of crime and the impact for letting it happen in your organization. I think it makes sense to be the top of the agenda.
Excellent. Good to see, hey. And staying with you, Jordan, what are the most frequent types of fraud and financial crime, particularly perhaps in capital markets, and how are they perpetrated, and what is their cost to the victims?
Yeah, I mean, it's a big question. There's a lot of different types of fraud and financial crime. I think money laundering is a big one. The transferring of funds into suspicious or illegal accounts that could be used to finance terrorism, fund drug cartels, political solicitation, funding illicit behavior. There's market abuse and insider dealing, market manipulation. And I think that the two real impacts here. The first is giving criminals access to funds to pursue potentially illegal activities, and there's a whole range of activities that could be used for. I also think a big impact is participants in financial markets and the financial system being taken advantage of, making financial markets unfair to broad participants when you're talking about capital markets. So the impact is significant and it's broad.
Okay, Julia, bringing you in, where do you see the most fraud and crime, perhaps on a wider basis than just capital markets?
Yeah, going a bit beyond capital markets, what I would like to stress is the extent of trade-based money laundering and financial crime related to trade-related transactions. So not fulfilling contractual obligations or using trade contracts to launder funds cross-border. So that I have seen in my couple of last roles, I would say.
Okay, we're not hearing you very well, Julia. Yeah, that's better.
Okay, yeah. Increase the volume. I was speaking about trade-based money laundering in broad sense, but also about the problem of not fulfilling trade contracts or in retail banking and in consumer and merchant-related transactions. Simply situations where consumers are not getting what they have bought online, which in turn affects the integrity of the financial system and payments providers specifically. So these are the issues that I would stress in payments related areas.
Okay, thank you very much indeed. And coming back to you, Jordan, tell us a little bit, we could spend a whole webinar on this one, but a little bit about the regulations that are covering fraud and financial crime, what they prescribe, how will they work, and where the shortcomings might be.
Yeah, another big question. I'll start at a high level, covering the broad regulations. I'm a technologist, so others of the panels may be able to go deeper. But the regulations that we pay attention to, on money laundering and financial crime, there's the Financial Action Task Force in the U.S. There's the Bank Secrecy Act in Europe. There's the Fifth Money Laundering Directive. With regard to market abuse, there's MiFID and MAR and FINRA supervisory requirements. These regulations define what is financial crime, what is market abuse. They define penalties for wrongdoing. I think they don't always prescribe specific technologies or workflows. Maybe they define KYC, client due diligence, but when we're dealing with surveillance, there's a lot of flexibility in taking a risk-based approach to making sure that you're actually getting ahead of this type of misconduct.
Okay. And are there any areas where it's kind of too easy to slip through?
Meaning like opportunities for criminal
Yeah,
behavior?
not just, but does legislation kind of not close the gaps anywhere, or is it pretty good?
So I would say it's definitely a significant deterrent. I would say that as technology evolves, as trading activity evolves, as the overall market environment changes, it takes time for regulations to keep pace. And I think regulations are constantly evolving, being updated to making sure that we're covering the latest risks. If we think of the last year, there's been a rise in insider trading risks. We've been shifting to a working from home environment where phone calls and texts and communication channels, aren't as easily monitored as they might be at the office or on the trading floor. We've seen a rise in unsophisticated investors potentially having an impact on the market, leveraging social media platforms. And so it takes time for regulations to keep pace. Regulators need to regularly publish updates on what they're prioritizing. And so I do think that there is opportunity as potentially technology or financial markets are getting ahead of regulations.
Okay. Lester, what do you see here as the sort of key regulations, and how well are they working? You mentioned COVID earlier. As Jordan says, working from home really added to some of the problems.
Yes, just to expand on what Jordan said, he mentioned the Bank Secrecy Act in the U.S., which is really the key set of regulations that the financial institutions are under, and that's been expanded over the years. But the focus is really on anti-money laundering. So the Bank Secrecy Act requires financial institutions to have an anti-money laundering program, an anti-money laundering officer, training for team members, and periodic audits. The AML program further requires in the US, they have to file currency transaction reports for transactions in cash more than $10,000. And since 1996, financial institutions have been required to file suspicious activity reports, which is really the cornerstone of the AML program. And in order to file suspicious activity reports, you have to have monitoring systems. As Jordan said, you have to know your customers to some extent in order to determine what's suspicious. So it entails a whole kind of set of different programs as part of the AML program. So it's has some effectiveness, but I think there are some shortcomings. I think clearly internationally the biggest problem is the use of shell companies, which are easy to form in different parts of the world, including the US and the UK. And once you can form a company and you go to the bank and open a bank account, the bank has limited abilities to really determine the legitimacy or purpose of the company at that point. In the US, one of the new developments this year is that legislation was the the mandate to develop a registry of companies with our financial crimes enforcement network, FinCEN, which will have some benefits, but it's going to take a lot of time to develop, and there are in my view utility will be limited. You mentioned shortcomings, so shell companies is a huge problem in money laundering. Some of the shortcomings in the U.S., I believe, are the fact that we don't include certain parts of our economy as financial institutions required to file suspicious activity reports, as you do in the UK, for example. So real estate companies are not included. They're not required to file suspicious activity reports, as our lawyers and accountants are not required to. And the art industry, which there was a recent article in the New York Times about the use of the art industry for money laundering, is also not required. So there's definitely some gaps that need to be filled, in my view.
Right. It's interesting because some of those are, as you say, they are covered in EU regulation. Yeah,
right.
That's interesting. Thank you. That's great. Let's move on, and let's go for another poll question for our audience. So this time, we ask, what are the challenges of compliance with regulations covering financial fraud and crime at your organization? You can tick as many of the boxes as you feel are appropriate to your firm. So please go ahead and do that while I come to Julia, if I may, to talk about the challenges of ensuring regulatory compliance and how they can be resolved. I'm sure as a practitioner, this is something you've done plenty of.
Yes, thanks, Sarah. So from my point of view, one of the biggest challenges is the disparity of regulations. So if you're a global firm, you have to work with sometimes very similar, but sometimes very different standards in various parts of the world. And then obviously you have to make a choice how to address that. And the most optimal choice, and this is the industry best practice as well, is to create a standard at a higher level rather than at a lower level. And that standard has to span across the whole firm. Another big challenge from my point of view is that even in the best regulated jurisdictions, such as the UK, the US, Singapore, regulators still don't tell you what to do. So actually you have to apply judgment, the proverbial risk-based approach, and the need to perform risk assessment. So one bank may have a very different profile, a risk profile from another bank, and a fintech usually has yet another risk profile, which will be very different from a big bank. What we are facing is that, especially in the RegTech space, but also in industry best practices, they seem to have developed one approach, one standard, how to deal with certain issues in financial crime compliance, such as onboarding, transaction monitoring. And these standards seem to be applied across the board in different banks. And sometimes, unfortunately, without thinking properly whether my particular bank where I work for, or my organization, or my fintech actually faces the same risks and the same challenges as those supposed to be solved by this particular solution or this particular approach. So this is another challenge, to actually apply judgment, and before employing any controls, actually trying to understand whether the risk that we are facing as a firm actually needs those controls, or whether we have to readjust them.
Okay, thank you. Lester, what would you say? You have plenty of practice at this as well as a practitioner. What do you see as the challenges, and how can they be resolved?
Thank you. Yes, after listening to Julia, we seem to have it a lot easier than her company does. We're basically a U.S. bank, although we do have some branches around the world and do a lot of correspondent banking activity. But we know what our regulations are. We know who our regulators are, and what we have to do. There's several challenges we face. One is Julia alluded to, is regulatory expectations. We've been having a good discussion in the U.S. over the last few years, and furthered on by the new legislation as to what is an effective program. So, we know what the requirements are, the regulators know what the requirements are, but exams tend to be pretty formalistic as to whether you're doing this right or doing that right, as opposed to trying to assess whether your program is really an effective program. And it's something the financial institutions encouraged as this new approach. But now, as we're on the brink of trying to possibly move toward that area, it's really difficult to try and assess yourself as to whether you're effective or not. So that's an interesting challenge. But I think it's good that we're exploring with the regulators how to go about this, and hopefully, it will come up with some good, change in approach and good approaches. Also, one of the issues we face is, and we talked about how creative and ingenious the criminals are, and how quickly they can move. It's much more difficult, especially for a regulated financial institution in the U.S. to change approaches and change systems, because everything is reviewed by the regulators, and they have very high standards. They want us to go through before we change an approach. They want us to validate it to see if this approach will be as good as a past approach, and goes through a lot of reviews. So that can really slow down the speed with which we adapt to changing circumstances. So that's also something the regulators are aware of, and we're trying to again find new approaches that will allow more flexibility and adaptability in addressing these problems.
Okay, that's great. Can we see the poll results, please? And let's see how our audience feels challenged. Yep. What do you think to that, Lester?
Interesting. Understanding and implementing regulatory changes, as Yulia mentioned, is a problem, and a little surprising at achieving compliance while sustaining business agility. Certainly understandable that there's some tension between these two, and trying to do both at the same time can be a challenge. So,
right, and nobody declaring no challenges. Excellent, thank you very much indeed. And before we move on to our next question, I think I have a question, and it is actually, let me come back to you, Lester, because you've been talking about working with regulators, and the question asks, reducing fraud and financial crime is important to everyone except the criminals. What help are regulators and perhaps local and global jurisdictions offering, and how can we tap this? You talked about working with the regulators. How does that work? Are they helpful? Either of you, Dallas, can please come in afterwards, Lester.
Interestingly, our focus in the U.S. regulation is anti-money laundering, not necessarily fraud per se. As far as our primary regulators, obviously it's a concern that they have, but it's not specific. But clearly, it's a problem that is recognized by everyone, and I think we're getting towards the approach that it's a problem that can only be solved by everyone working together, including the regulators, the other parts of the government, and the financial institutions. So again, the changes in approach that I discussed just a minute ago are applicable to the question. Is we need to have more flexibility, more information, and more collaboration. During the COVID situation, for example, FinCEN, our Financial Crimes Enforcement Network, was very proactive in working with the financial institutions once they recognized the scope of some of the fraud schemes of bringing together financial institutions and regulators and law enforcement to discuss the issues and discuss how we can approach them better. So that's an example of a good positive approach to addressing some of these issues.
Thank you. Yulia, do you see much in Europe in terms of working with regulators, or do you feel like the regulation is made and you must do what it says?
I think actually we're at the point where, the regulators have shown through enforcement what standards are expected in terms of various areas in financial crime compliance, such as onboarding, transaction monitoring, but specifically onboarding. And I think there needs to be a move towards beyond that, beyond that minimum standard. So the regulators have to take the lead in terms of showing what more can be done, because it's one thing to ensure a standard level of due diligence in relation to high-risk customers, and it's yet another thing to show that innovative technologies can be applied, that data has to be good enough to be able to answer the question who your clients are at any given moment. And that lead has to come from the regulators. And I think there has been a vacuum recently in terms of this regulatory leadership, and it needs to be changed.
Okay. Thank you both. Thank you very much indeed. And let me come back to you, if I may, Jordan, to talk about, I know you know the answer to this one, the technologies, tools, solutions and services that can help people here and really help them to, identify what's going on, try to stop it, try and stop it happening again and all that sort of thing.
Yeah, there's a lot of capabilities out there, and with the volume of data that exists in today's financial system, you need technology to sift through it. You're not going to be able to do a manual review or an ad hoc search and finding out what's relevant. Our mission as a company is to organize data, discover the truth, and act on it. And it's a nice frame to organize the different types of technologies that we need. And so when you think about organizing data, you need a platform that can organize the large volumes of customer data, transaction data, trade data, communication data, potentially linking them together. There's just so much activity happening in these organizations that you need a system that can structure it, make it searchable, and actually understand what's happening. And so, surveillance technology, transaction monitoring platforms, KYC platforms really help you organize all of this data. Discovering the truth is sifting through it, often applying machine learning, artificial intelligence through this large volume of data to find out what's relevant, right? You should have a system that is taking all these new customers, these transactions, these communications between us and our customers, between traders and counterparties, and sifting through it and bringing forward to you the highest risk content. And there are surveillance platforms out there that generate alerts to focus you on the riskiest areas, the high risk pieces of data that you need to review. And then acting on it is a defensible review platform. So as you're sifting through these alerts, you need to prove to regulators that you are conducting a review, that your review is defensible, that it's clear why you made a decision, why this transaction is okay, but this one isn't. And our teams could be hundreds of people in compliance, thousands of people. And so workflows to organize the many different teams, the escalation processes, the quality assurance processes, they get really, really complex. And so having a really a platform that manages the review, the escalation, the case management in a defensible and audited way is really important to supplement the machine learning alerts that are generated. So there's a lot of different technologies that are out there, but that's kind of the framework that we use to kind of organize the different tools.
Okay, thank you. Can I just ask you something about ML and AI? Obviously,
Yeah.
mistakes can be made. How do you guard against that? I know some people are a little bit reluctant to use these systems yet because they're quite proven but not mature.
Yeah, and I think it's interesting. Like the technology to identify crime has this type of content has been around for a long time. But what holds people back is the explainability, the defensibility of it. Because just because you find an alert, that's not enough in compliance, right? You need to prove why was this alert generated, why was this one not. And so the innovation that we see happening today around machine learning and artificial intelligence, it isn't just how do we build the latest new models to detect risk as effectively as possible. Often the innovation is in defensibility and reporting. And so there's a few things that are impactful here. One is explainability. So providing additional information on an alert that defines why it was triggered and why another alert wasn't triggered. So that's an important part of it. Reporting is really important. So all of our machine learning models that we build generate statistical reports that include precision, recall, confidence rates, statistical validation that your model is looking for, is identifying what it should be identifying, and that's proved with quality assurance workflows. And so there's a lot of innovation here, and I think that's what's necessary to use it in this context where having the wrong system can be impactful, really impactful.
Okay, thank you very much indeed. That's interesting. Yulia, coming to you, how to use these are the best technologies and solutions and services that can help you in your work?
Yeah, so the approach that we are seeing that most firms are taking is that firms are creating a puzzle of various technologies stitched together, aimed to solve for any specific problem within financial crime compliance. So if for example, you're dealing with onboarding, you have you need to have a number of technologies, such as ID&V related identity and validation, liveness checks, authenticity checks in relation to the document, electronic verification of data pertaining to the company that is being onboarded, or the retail customer. So in this domain, everybody is moving towards straight through electronic, fully digital onboarding with minimal human intervention or analysis, although it still hasn't been achieved. So you end up with a number of different tools, as I said, stitched together through APIs, which are supposed to work quite well together and ensure that low-cost digital onboarding. The low-cost part is still a problem for the majority of firms, as we have seen in the recent news as well in relation to operational costs pertaining to a number of fintechs, some very famous. Yeah, but this is where we are moving to. And machine learning and AI are obviously the big innovations, which are mostly currently applied in transaction monitoring. But I would say that we would move to those in other financial crime compliance domains as well.
Okay. Is that what you see when you go into the market, Jordan? Quite a lot of fragmented solutions with different parts put together?
Yeah, I mean, I think the legacy in this space are platforms that are inflexible, closed, hard to adapt, and hard to speak to each other, and that's changing. And I think now, if you're looking for a new solution, you're going to demand something that is open, that is holistic, that has API coverage, that is extensible, and allows you to configure the platform on top of what comes out of the box and allow it to speak to, other systems. I mean, if you think of large financial institutions, you have a whole system that defines that controls your employee identity. Who is the individual? What department are they in? What's their role? How long have they been with the company? You have a whole system to define your customers and all the information around their customers. There's a separate system in transactions. There's a separate email system and communication system. And if you just operate in a silo, you're going to miss very relevant content that helps explain whether an event is high risk or not. And I think that the newer platforms that are being developed, they're open and they're built with connectivity in mind.
Okay, thank you. Takes time to get there, though, obviously. Yeah.
Yeah.
Lester, coming to you, we've talked a little bit about the need for explainability around things like AI and ML. What are the data privacy issues here? Because obviously you can't misidentify people, or it can happen. How does data privacy play in here?
Well, in a few different ways. When you're talking about customer identification, for example, we have access to, and in all of these areas, there's a tension between privacy and efficiency and effectiveness. So in customer identification, for example, there limits on what information we can have access to. Certain, and this will be an issue when with the new company registry that's being formed as well. There will be limits on, bank. It won't be open completely, but banks will have to, submit requests for the information, and with respect to establishing identity, again, there's limits on what we can do. So there's, and of course that's to protect people's privacy. The same issue goes with respect to being more effective in addressing fraud and financial crimes, is that there are obviously internationally, and this is an area Yulia must to deal with a lot across countries. Sharing information can be very difficult, and same for us to some extent as far as sharing information, even with our Wells Fargo branches overseas. There are restrictions on what information we can share. For example, if we file a suspicious activity report on someone or a company in the US, there are restrictions on sharing that with our branches overseas. The new law, again, addressed that situation and encourages the development of pilot programs. Another information is sharing information among banks in the US. There is a mechanism referred to as Section 314B of the USA Patriot Act, whereby one bank can request information from another bank using certain procedures and under certain circumstances, and this is used to some extent. However, it's not used as extensively as it could be, but it makes it easier for the fraudsters. If we identify a customer who's engaging in fraud at Wells Fargo and close their account, they can walk across the street to another bank and open the account, and the other bank won't know that we just closed the relationship because we suspected fraud. So there's this constant tension, which is has to be balanced between privacy and being more effective at addressing financial crimes. But it certainly, from the financial crimes perspective, it limits our effectiveness.
Okay, Jordan, what would you add to that in these days of innovation and less manual processing and so on? How does data privacy get protected here?
Yeah, I mean, I definitely agree with Lester that detecting fraud, financial crime is often at odds with privacy regulation that minimizes the searching and navigation through personal information. Certain data privacy regulations often have limited exemptions when you're looking for criminal behavior, which is what we're attempting to do here. But even so, the goal should always be to keep privacy in mind. From a technology lens, there's a number of things that we in the broader industry do. The first is auditing is in place. So if you run a search for a specific, we deal with communications, which is often very, very private and sensitive content. Folks are communicating with personally on their work accounts, and there's often an overlap between personal and work content. And so we embed auditing. So a reviewer who's reviewing a communication, we know what they searched, we know what they looked at, we know what they reviewed, we knew the decisions that they made, and someone breaching a barrier for like an inappropriate barrier, like that will be tracked and captured, and you can take corrective action on it. There's permission models that you can enable so that only reviewers can access the content that they should be accessing. You don't want your entire compliance team to be able to view everything or to search across every communication, every transaction, every record if there's no risk indicator that is a triggering mechanism for actually running that type of search. And often that triggering mechanism is really important to track. The reason that you might be running a search or that you might be conducting an investigation is because an alert was generated. And so having that that chain that tracks, this was the alert that was generated, this is the triggering event, and this is why I am conducting this investigation, it's really important to maintain that. So it's very clear that whatever searching you may be doing was driven by a real potential risk.
Okay, lovely. I have a couple of audience questions come in. And Jordan, I'm going to That's this one off you. I'm not sure there's an answer, but I will ask you anyway. How
Uh-oh.
can we, okay, don't worry. How can we track and monitor technologies and techniques used by bad actors attempting financial crime and cut them off at the pass?
So what's the technology that
Yeah, how can you
criminals
tell
are-
what they're up to and how can you block
Yeah,
it?
I think
That's too bad.
you know there's a lot of mechanisms for staying up to date. I think one is attending events like this. We talk about the latest innovations, the latest risks to watch out for, and so I think keeping a pulse on the industry. I think paying attention to regulatory release notes. If there's a new type of crime that it's occurring in the industry, regulators will catch on and publish notices around the globe. And so I would pay attention to those notices. Vendors are often, their entire innovation is dedicated to detecting this type of misconduct. And I would have conversations regularly with vendors, maybe beyond the ones that you're using, and understanding like what type of innovation are they investing in, what type of machine learning have they built, what's the new types of behaviors that they're looking for, because it often can be an indication that there's something new that you should be looking for. So there isn't necessarily a perfect answer, and this crime is evolving. There's new types of risks, and so I think it's just being out there in the space and talking to your peers. That would be my broader recommendation.
Okay. And a little bit similar, but let's have a European and a US answer if we can. Let me come to you first, Lester. You've talked about things like FinCEN, and I think you've talked about the Corporate Transparency Act. Is this where everybody will need to register at some point? Yep.
Yes.
And this question asks, are there organizations or associations we can join to maintain an up-to-date understanding of how to protect our firm from financial crime? I think it's saying, are there any industry bodies that it would be worth joining?
There are some private organizations that are probably well known that the people in the financial industry. I don't want to name them because I don't know if that's proper or not. But if anybody's free to contact me. But there are some organizations that do a good job of keeping people up to date. There are. I mean, every morning I just without I get probably 10 or 20 news updates from different companies where I've looked at an article, or they ask if you want to be in their mailing list, and I get updates. So there's certainly plenty of ways to keep up to date, through publicly available information, as well as some other organizations. And FinCEN, they don't put out they put out advisories, which are you can sign up to receive those alerts as well. Law firms, again, if you look on their website, they send you articles. So there's lots of different ways to keep up to date, really. And yeah.
Okay, and Yulia, what do we have in Europe? Are any of the industry bodies or organizations particularly committed to this area?
So there are a couple of public-private partnerships in the UK. Obviously, there is CHIMLIT. In terms of organizations, obviously everybody is aware of the training, the learning and development organizations such as ACAMS and International Compliance Association, which provides training but also certification for financial crime professionals. And as Lester said, simply going through the news and actually scrolling through your LinkedIn newsfeed actually is a great way to keep up to date and see what people are talking about globally, not only in your country.
Okay, thank you very much indeed to all of you. That's great. And Lester, let me come back to you. Can you tell us how firms can take a proactive approach to financial crime beyond compliance? Because obviously compliance comes very high up there on the list, but there may be some benefit from pushing it a bit further.
Sure. I think some of the ideas that Jordan mentioned, as far as using technology as best you can to share more information and make information more easily accessible, is probably the best way to take a more proactive approach. As he said, we have huge amounts of data, especially a big bank like Wells Fargo, but we have to make the best use of it as possible to protect ourselves and to use that information to be more proactive. So, for example, we, get alerts, on a fraud situation, and we investigate it. Using the information from those kinds of investigations, you might be able to take a proactive approach by looking at where, are there commonalities among the fraud cases? Are there coming from certain areas? Can you identify, certain customers or certain trends in the customers that are either facilitating the fraud or being victimized by the fraud? So using all that data puts you in a better position to try and address it in the future. And then as Julia talked about onboarding customers, you can use that information hopefully to improve your onboarding process and reduce the risk there. And of course, big goal has been stated is automation. The more you can use automation and AI and monitoring to address potential risks will again help you to try and get in front of the problems, but it's a huge challenge. And the more information and data you have, the bigger the challenge it is.
Absolutely. Julia, what would you say in terms of trying to take a proactive approach here and not just sort of always being on the back foot for compliance?
I definitely agree with Lester in relation to data and using data and capturing it and maintaining data integrity and analyzing it in an ongoing way. That's super important. Another very important thing is, I would say, conducting a risk assessment, regular risk assessment, so enterprise-wide risk assessment to understand what kinds of financial crimes, what kinds of fraud, what kinds of risks in general is your organization exposed to, rather than sitting back and just taking whatever the market is providing to you in terms of solutions, or just looking around to see what other organizations are doing. So that's very important as well. Actually understanding what is the business model of the firm or the segment, if you're working in a big organization, what that specific business poses to you as a financial crime professional in terms of risks, and addressing those specific risks.
Okay, thank you very much, both. Let's run a final poll question here. The question goes a little bit beyond this. We may not get too far with it, but it asks, what extent of operational and business benefits does or can your organization expect to gain from a successful response to fraud and financial crime? So you can tick as many of the boxes as you feel are appropriate. So please go ahead and do that while I come to Julia to say, can you achieve any operational and business benefits by getting this right?
I think it's hard these days as a fintech to achieve sustainable profits and scalability without getting it right. So I'm speaking on behalf of fintechs. And as I alluded to before, it's a well-known fact now that operational costs are huge for fintechs, and compliance is, let's face reality, is the big part of these operational costs. So actually we can, if we get it right, we can kill two birds with one bullet. We can just, we ensure that we are protected from financial crime and human error is reduced to a minimum, but we also ensure business sustainability and profitability if we embrace innovative technologies, if we do it right, of course.
Okay, Jordan, what would you say there? Do you see a benefit if you get this right? As you said earlier, there is no 100% right, but if you're, pretty on the ball.
Yeah, no, you have to be strong here. There's direct benefits. If there is financial crime or fraud in your organization, there's significant financial penalties. There's reputational risks where customers don't want to work with organizations that are involved in misconduct and wrongdoing. There's ethical considerations. I think all of us, we want to do the right thing, and so there's direct implications where if you do it wrong. I think doing it right allows the business to move faster. I think getting a deal done oftentimes requires a compliance review, and if that review takes a long time, there's many steps, you can actually impede your business objectives. Again, I deal a lot with communications, and customers want to communicate on, in certain parts of the world, they want to communicate on WhatsApp and WeChat. They want to use Zoom. They want to use Teams. And if you don't have capabilities in place to capture these communications, to monitor them for various types of risks, you could actually slow the business down and force them to use more antiquated or legacy communication technology, because your compliance procedures are behind the business. And so I think there's a lot of direct and indirect operational concerns to think about when you're building a financial crime compliance program.
Okay, that's great. Maybe see the poll results, please. Yulia, you mentioned operational benefits. What does that look like to you?
Well, it confirms the idea that compliance is necessary. We need to do the right thing, but it's also costly. So doing it right in the right way, but also doing it well is necessary now. We have to cut costs. Unfortunately, this is the reality we live in.
Right. Jordan, you just answered this question yourself. Is that how you'd expect to see things?
Yeah, I mean, there's a mix of operational benefits, business benefits. It seems like from the poll results, probably skewing towards operational benefits, which I think makes sense. There's just a lot of operational processes that go into financial crime, and it takes a lot of work. It takes a lot of costs, as Yulia said. It has implications on the broader organization, and so doing it well, streamlines your overall operations.
Okay, thank you very much for that. And coming to our final item for today, let me ask all our speakers to provide some advice to practitioners working to cut down financial abuse. Yulia, can I come first to you to offer some advice to our audience?
I think it's very easy to give advice and not so easy to, to actually do it yourself. But if I had to say something, I would say that data is very important. Keeping data, capturing data, not only for compliance purposes, but data these days is one of the major assets that any organization can have. So capturing it and using it well is really a wise thing to do. Yeah, and exploring new technologies, not being afraid of those. So many people call machine learning and artificial intelligence black box. People say, "Oh, but how can we explain it to regulators? What goes into the black box? What comes out of it? It's hardly explainable." But I would say, actually, it is explainable. It's about math. It's about statistics. And it's actually hugely efficient, and it's just the right thing to do if we want to combat financial crime. So society is moving in that direction, and there is no reason to perpetuate this resistance from the industry side. So this is probably another advice that I would give.
Thank you very much. Lester, what would your advice be?
So I've got three that start with C. I'll call them the 3 C's, although it's not the top grade. But the first is to collaborate within the bank. In a large institution like Wells Fargo, once we get all the right people involved, we can usually solve a problem. But we have 250,000 people in the bank, and getting all the right people involved can take time. So, for example, just thinking back on business email compromise, how many different parts of the bank it involves. It involves sometimes a customer that's been defrauded. So we have our relationship team. It's a financial crime, so we have our financial crimes team involved. We have our technology team involved, our cyber team, our operations, our payments. So you get the first call, and then you try to figure out who needs to be involved. Once we got everyone on the same page and involved as in a working group, then we're able to address it effectively. So collaboration within the bank is one. cooperation with other financial institutions, either just sharing, public information and discussing issues, or as I mentioned, under the proper circumstances, sharing information about specific cases under the provisions of the law helps us again to collaborate and cooperate against these problems. And the third one is kind of, as Julia mentioned, is be creative, not only with new technology, because it's, they're not easy to always implement a new technology, but just look at different ways of doing things. When we're used to looking at information one way in the bank, we consider other approaches and look at it in a different light or in a different way. You can sometimes find better ways to do things. So being creative is also important, I think.
Thank you very much. And Jordan, what advice would you give?
Yeah, first is I would say it should always start with a risk assessment, and you should really be thoughtful about defining your risks. We talk to organizations that sometimes they'll apply the same type of compliance processes across the whole organization, and really an effective technology and operation integration really looks to the specific risks and takes a risk-based approach. Certain customers are riskier than others. Certain communication channels have different risks. Certain employee populations have different risks than others. And so make sure that your operation is tailored to the risk assessment that was completed and the actual risks within that business unit. When I think about technology, I would demand a holistic and flexible platform that adapts to your needs instead of having to conform to the technology. Most of the organizations we deal with, they're large, they're complex, they're unique in their own way, and you should demand a platform that's able to adapt to you. And then the last is, stay involved with the broader ecosystem. I know Lester talked about collaborating internally, but it's also important to pay attention to the broader environment. Make sure that you're talking to your peers, attending events, paying attention to regulatory notices, which is also really important. And attending events like this are really helpful to making sure you're keeping pace with what's happening.
Excellent. Thank you all very much indeed. And thank you indeed for sharing all your expertise and experience. It's been very interesting. Thank you too to Relativity for sponsoring today's webinar. Before we close up, just a quick note that if you scroll down your screen to additional options, you'll see some A-Team resources that may be of interest. You can download the latest version of our Regulatory Data Handbook. You can access a recently recorded webinar covering the evolution of data management in the buy side. And you can sign up for our live and streamed September briefing in London dedicated to ESG data management. That said, that's it for today. So thank you again to Julia, Lester and Jordan. And thank you to all of you who've taken part in the webinar. Please complete our feedback form as we are always keen to hear your views and improve our products. So meantime, thanks again and goodbye.